Welcome to Power Charting. I'm Bruce Fraser, your host. In the house with us today is the one, the only, Andrew Cardwell, Dr. RSI. Andrew, welcome.
Hey, Bruce, it's great to be here again. We always have fun and we get to teach a few people a few things that'll help them.
I always love to have Andrew on. He's our favorite guest among all our guests are favorites, but mainly because I insist that he bring his crystal ball, and you can see in here that there's a chart in the crystal ball, and this is really the secret to his tremendous success. And so, but anyway, don't tell anybody. But anyway,
well, it's the crystal ball and the fact that today's technicals will write the headlines for tomorrow. We don't always know what's going to make it move, but the charts will show you ahead of time.
It's that old saying, reasons are optional. So just this is how to contact Andrew. And so here's his website, his Twitter handle, his email, and
the Skype too. Skype is Andrew RSI.
Very good. So be sure to write that down. I'll get that on the slide for the next time. And he is the creator of the RSI Edge. It's a very special, unique way to trade with the RSI. And you've been using this method for how long?
I think I gave my first presentation, public presentation, is March of '89, but the first 10 years I started in May of '78. And I was very fortunate that somebody gave me Wells Wilder's article from Futures Magazine. It was then called Commodities Magazine. In 10 years, I did it without a computer.
Wow.
Plotted every day.
Wow.
All different markets.
All right. Well, so let's get started and use this time really well. You know, shortages can start in the most unexpected places, Andrew. And one of the concerns I have for the commodity markets are apparently there are shortages developing, and you wonder where the origins of them are. You know, it's like
it's a sign like that creates a shortage.
Exactly. The next thing you know, it's toilet paper, and then it's gasoline, and you know, it just goes on and on like that. But it's got to start somewhere. I think this might be it. So I thought that just to start, we would talk about the Dow Industrial Average, and this is a chart through yesterday, the 29th. And this is the upward stride since November of last year. And here's a channel that was developed off these 2 points right here. You can see the breakdown at the end of August. And this breakdown went back below the buying climax. The thing that was a real warning was the fact that once the Dow got up and out of this area, it couldn't keep rallying. And so then it made a lower high and it's come back into this channel structure. And now we're having a kind of a rough day today, which I don't have on this chart. But the other thing that's so interesting, Andrew, is this bullish percent. And this is the actual number of stocks in the Dow, and not just 30 names, but they're very important. And the percentage of stocks that are on bullish percent buy signals in the Dow went in June from being over 80% to where today it's down in this area around 50. So about half the stocks, and I'm sure with today's action, it's even dropping some. And so there's a real sort of a divergent characteristic to the way that the Dow is trading here. And I'm very curious about what you think about the market at this point.
Well, that high in August, where is it? About the middle of August, I started getting a little, I don't say concerned, but I was a little on top of it in terms of this is just not pushing through. I was getting my positive reversal patterns kept giving me higher targets and higher targets, but we were achieving them up until August, mid-August. It sold off. I had another target. I wrote about it in Twitter. 35,641 was the target. And we had that short little sell-off in August, went down, turned up. It should have taken out 35,641. It came close all those days, but never closed above it to confirm it was still up. So I told people this going down for a while. We just had a failed positive, and the best sell signals are failed positive reversal targets. So
Now,
I'm expecting to see it go lower.
here's a point and figure chart that I just put together. And this is actually the scaling is quite large. 359 points is defined by ATR scaling. And I did the COVID low of last year. So this is basically May back to March. And it's a rather wide V bottom, as we all know. But interestingly, if we just take this 3-box reversal method, it takes us up to 34,838. And this is right where the climax happened. Look at this last column of X's up here, and went right into this area. And then look at the resistance that's formed across this. One attempt to overthrow all this and up thrusting action, and now back in. Now, admittedly, we also want to take either the count of the midpoint and the high, and that would be a higher objective. But what I really want to just show today is that we have fulfilled the minimum objective. Now we look for either reaccumulation for another move up here, or as we just saw on that chart that we looked at of the vertical, possible redistribution or distribution, I would say. And so we're certainly, I think, unfinished in this area and may have more work to do, but a very interesting place in the market. And we fulfilled the minimum objective of the COVID low base. So,
well, I had that positive reversal target, and I kept watching, for those couple of weeks there, and it was not going up and achieving it. So I even started looking at the 240s and the 60s, and they were starting to fail. The daily had failed, and I'm really curious to see tonight's close. Oh, there's
so
my
here,
sorry. I was going to say, there's the CRB chart, and inflation, folks, is not transitory. The only people it's transitory to are the people that are using that word. Inflation builds and it builds and it builds. Remember, there's a beer shortage. There's a panic. Buy here.
Yeah, that
we're going to see more and more of the commodities. I've been bullish crude oil since it was 42. Commodities, coffee is my favorite. Turned bullish on coffee at around $1.05 and said we're going to see $2, $2.50, $3. The grains, I think, are getting ready to launch again. And gold makes its seasonal low usually in October. I think the seasonal low may have come early. We got some big moves up in gold and silver today.
So now here, this is the CRB point figure. And I just took this count across here. And this is a chart that I've published on power charting in the past. If you take this count, 17 columns across, 3-box reversal, 2-point scaling here, it counts up to 248. And so that becomes the target. It's a rather wide area, but that becomes the most ambitious target. 202, I think, at the low to 248. So it's a rather wide area, but we still have room to move, and we're above these prior highs right here.
I can see 240s easily. Some of these markets are coming late to the party, and crude oil, to me, if it breaks 80, we're going to see 100 maybe by next summer.
Yeah, I have counts that go up into the 80s to 100 area for crude oil.
Yeah, if we get above 83, 84, then we're probably, our next target's going to be 100.
Now,
and tonight will help too, because you get to see the monthly closes. And we're going into the last quarter of the year.
This is really a fascinating chart on natural gas, because we, I think, are all familiar with the disruptions that are occurring in the natural gas market in Europe right now. But this structure, it goes all the way back to 2008. And so you can see that there's a substantial, what I call a campaign count, that goes all the way back to the '08 period, and natural gas has been low priced and really unloved and forgotten for a long, long time. And so this particular count, I'm not going to count it here today, but you can see that there's segments. You want to count these different segments along here, and that oftentimes is where the market will pause on the way up. And so here we're right up against this resistance area, and looking at this, you can see that every time it's gone to resistance, it's had a pretty sharp reaction. And here, even at a lower level. Now, we always look for change of character in Wyckoff, and the change of, and I know you do too in RSI, but here, if we get a pause at this resistance area and we don't have supply that takes the market back down, then that really does further confirm the potential for this large accumulation area to be complete and
be a big breakout.
It doesn't even have to pause here. It could just jump up and out and then maybe backs up and then starts to go. And I have natural gas prices here that go upwards of, I think it's 28.
I'll start following it more and be able to make more comments on it. But the acceleration, one of the things I taught in my RSI work was when you can notice an acceleration, the initial signs of an initial acceleration to the upside or the downside. And it's combining my range rules and moving averages. So when we start to see, in case in point is if you could scroll up a little bit where that RSI first got above 60, the red line. Okay, that was back in May, towards the end of May. With the RSI, that red line went above 70 or 60, right in through there. The red line, the 9 went above 60 and it accelerated. Look where your price was at that point. Then look at where the 45, the other moving average, crossed above it. And all the way above the 60.
Right here.
Yeah. And then the price really started to accelerate to the upside. That pullback in August was a buying opportunity, longer term. If you draw a line from the early May, the early May low in the RSI, up in your RSI chart, through the low that was made in August in the RSI, draw that line across, and then you look at those 2 price points. That's your long-term trend. That's a long-term positive that said even then, what was that price? 380, 390. And now we're already up to whatever, 4 or 6.
So these areas here, getting above the 60 on the moving averages, this confirms the trend. And then the pullbacks, the acceleration, then these pullbacks are opportunities to initiate or add to positions on the way up.
Trains coming into the station. If you want to get a ride on it, that's where you're going to jump on it.
Right.
And you look at the price chart, the moving averages stayed positive all the way up.
Now, here I'm seeing what it could be a throw over and an overbought condition, and that could very well produce a range bound condition for some period of time.
Or it's going to pull back and create another positive and launch it higher.
Absolutely.
That's still positive there, and the crude oil.
And keep in mind, everybody, that this is the area of resistance that we identified. This is a very long-term resistance area. So it kind of makes sense that this would be a blow off. And there's all this headline news about natural gas right now that could very well.
And this is a daily, right? This is a daily chart.
Yeah, this is a daily chart.
The weekly's got to look very positive.
So here's the monthly.
The monthly's
vertical chart. Now I didn't do the RSI. I could put the RSI on here for monthly.
Oh, that's pretty. Oh, it just came under the 40 level. And now it's above 70. And look where that 9-period moving average is. It's getting ready to go back above 60 again on a monthly.
Isn't getting above 70 on the monthly kind of a rare occurrence?
It's rare.
Yeah.
So if it backs off a little bit, I don't think it'll come down much. The momentum may sell off a little bit, but the price is probably not going to drop that much because underlying strength is saying this thing is higher. Just like, oil now, crude oil breaking 80. It gets above 83, 84, 85. You're just opening the door to 100 sometime in the next 6 to 9 months. So that's one thing about inflation I learned from being in the business in 78 is that all the markets that are commodity related don't all turn at the same time. Some will take the leadership, then they'll back down, and another one will take leadership, it'll back off. They don't all go at one time, but slowly but surely, they all get into stronger and stronger uptrends. And that's where I think we are.
Fascinating. Now tell me, we're here to look at some of the markets that you're interested in. What would you like to see?
Gold, coffee. Today's a big day, gold and silver. Gold was up over $35. Silver was up 50, 60 cents.
Now, this is GLD, so
that's fine.
That shows today's trading.
Yeah, it's starting to turn up. You see, we've only been below 30 a couple times. I don't think we're going to go back below 30. If the GLD, looking at this chart, it takes out 167. And I'd say the next target's probably around 172 and goes above 60. And we'll see those moving averages turn up and say it's going into acceleration like it did back in early April. People told me I was crazy buying that bottom or even talking about buying gold there. So why? You have a bullish, basic, flat bullish divergence. It didn't drop below 30 the second time pullback, but the moving averages in the RSI had crossed. And they went up for a while. It was a nice move. I was in the futures and had clients and students in the futures. And some were getting GLD, some were just buying gold futures. But when it got up over 70, that shaded area at the top, it was due for a correction. But this could be massive. I longer term, I'm looking at 2,400 for gold. For silver, I can see minimum 40 and maybe even a break of 50. And I was around when we saw 50. It was $50 in silver and it got up to 875 in gold. Well, the recent lows are about double what 875 was. So if they double from down here, the gold's looking at probably over 2,400 and silver's going to go over 50.
I've got point figure counts that go over 3,000. So I think we're in agreement that there's a huge cause build, at least in white coffee in terms, there's a huge cause build in gold.
Yeah, I can see it in the RSI and I'm really looking forward to seeing the monthly closes tonight. Silver.
Oh yeah, because you were saying about the end of the quarter. Here we are virtually doing this recording on the last day of the quarter, which I think quarter ends are very important.
They very, very much so.
Yeah. Yeah. So
you got a gold chart or a silver or gold chart?
Oh, this is silver chart right here.
Okay.
SLV. So this is the ETF.
Right. That's the ETF. That could double. We could maybe hit 50. I don't think it's out of the cards. I would like to see the moving averages start to base out and turn up. And the RSI is finding support at 30. Get back above the 40, 45 level on the RSI, and then you should start seeing positive reversals because I think we're getting ready to launch.
Well, and keep in mind, folks, that these are not recommendations. We're just really discussing
teaching.
How exactly. Yes.
We are inform, educating, and entertaining. That's our job.
That's it. Okay, so
we're hoping to get an Emmy one year.
I'll give you one right now.
Okay, thank you.
So what other markets would you like to look at today? Oh, you talked about coffee.
Oh, coffee. It's just been I always talk, and I taught my classes that there's usually 10 really good trades per year. And of those 10, 3 or 4 are exceptional. Well, I would put coffee into that exceptional category.
So here
because
we have continuous contracted coffee, not through today. We don't have today. We won't get that till after 4 o'clock Eastern.
That's
but
okay. I mean, I learned I didn't have a computer when I started. I had to wait to get the close so I could calculate it with my paper and pencil and put it on graph paper.
Sure. Yeah.
So
I
you learn
was doing
patience.
that. Yep. I did all my point and figure charts by hand. I had a huge stack of them
Yeah,
every
and
day.
patience is something that a lot of traders don't have. They're afraid they're going to miss a market. They chase it. You shouldn't have to chase it. You should see what it's doing before it gets there. Gretzky
So
never chased a puck. He went to where the puck should be when he got there.
there it is. So, and that's a sign of mastery, which I absolutely love your mastery orientation towards RSI. So
If
now,
you look
Mhm.
back in November when it first started up,
Mhm.
that's where we were talking about $2, maybe $2.50, maybe $3. That was way back at what, $1.05. I said, you want to trade, buy and hold? Here it is. It was set up, and only one time did it drop below 40, and that was in early April. The RSI went below 40. Soon after that, the RSI moving averages started up. The 9 went up over 60, said we're going into acceleration in early May. And then the pullback in July, come down and bounced right off the 40 level. That's my range rules. And this is all uptrend. This was solid uptrend from the first week in April. When it turned up from there, the moving averages turned up. The closed moving averages on the bottom chart stayed positive. We're just starting to turn up again. If you look at where that 9 moving average is on RSI, we're getting ready to go up again. So getting above 210, 215, it'll open the door to 250, 260, 75. I think we're going to see $3 before it's over.
Now we
You
call
measured
this
a wedge or a triangle, or if you want to call it a flag.
Yeah.
I call it, I have one word for it, up.
Well, we call this in Wyckoff, old terms, this is not just a Wyckoff term, it's a hinge. And so this is a classic hinge where you consolidate. It's typically a continuation pattern, but you watch the hinge for the final consolidation and jump out, and it becomes a classic trading opportunity.
Can you please switch this to weekly?
Just for you.
Oh, thank you, sir. Tell me that's not pretty. How would you like to have bought down around 105, maybe added another one at $1.20 and maybe another one at $1.40 and be sitting there?
This is a classic Wyckoff style accumulation structure with a large, going back to 2018, with a large accumulation base with a substantial point and figure count within it. And it was something that we talked about in our Wyckoff market discussions on Wednesday. We talked about coffee. I may have talked about it in power charting also. I don't recall right now, but let's see if we can just put up a point figure chart and see this. Yeah, so here, substantial accumulation structure that you could count to here, and then you could count over to here, and then finally a count over to here. And the other part of this that's so intriguing is that you have resistance across this area at 216.
Oh, that's going to get blown out.
If you have any kind of a pullback or a pause in here, then this whole area becomes a count. So this could be, and I think that coffee prices are more critical to mankind than even natural gas prices.
They're more important to me than gas prices. I can walk wherever I want, but I got to have my coffee.
Oh my God.
And so do the people at Starbucks every day. That line goes out the parking lot and into the street. So
there it is. So So anyway, there's coffee. What else would you like to see?
If we got time,
Got
we looked at
3
crude,
minutes?
right? Did we look at crude?
We did not.
Okay.
Here's
I keep talking about going. I better explain why.
so here is a weekly chart of crude oil, and I just wanted to really point out the importance of relative strength. Here's crude oil to the S&P. I think the S&P is the tail that wags the dog of all asset classes, all stocks, commodities, etc. And because institutions are always looking to be able to compete against the S&P. And
Right.
I know there's exceptions, and but look at this downtrend. And
Yeah.
so
Until it
since
made, and this is, let me just jump in here for a second.
of course,
In April and March, where it got down to that low in price, you know, you had,
Yeah.
that low. People
COVID
say,
low.
well, you didn't make a bullish divergence. You know, I'm looking at this chart in terms of what I saw at the time.
Right.
Not all markets, you know, markets don't ring bells at the top or bottom.
Sure.
And when you make a momentum low and a price low and then go up from there, you made it without a bullish and bearish divergence. They are not true reversal signals.
Well,
but when you get something like this, it's one of those, okay, now look at the trend. It's still moving.
See, here,
all without a bullish.
This is that whole idea, get that first jump here, and you're in the high 30s. Well, the relative strength starts to go positive, and then the acceleration happens because institutions, large institutions, are starting to recognize that crude oil is. Oh, and by the way, I want to make this point. This is not to the S&P; it's to the NDX. So this is a NASDAQ 100. So it's outperforming from late 2020. It's outperforming the NASDAQ 100 in the mega cap stock names, which is phenomenal. And
well, the point that I made about 10 good trades a year, 3 or 4 exceptional. This year it's been crude oil, it's been coffee. There for a while it was gold to the upside, silver to the upside. And they're still working. Those trades are still working.
Sure. Well, we could be in a secular bull. Now we have about a minute left. So here is crude oil RSI daily chart.
Still positive, and look where that moving average is. It's about ready to break 60, that 9. Oh yeah, this is going higher. 83, 85. Yeah, it's going to go.
This is a big reaccumulation too. Selling climax, automatic rally, range bound. This is a count that can be taken, but also there's a beautiful base here.
All right. And like the Wizard of Oz, they said, NEM, it's a twister. It's a twister. Yeah, this is getting stronger.
Yeah, right.
Now, just look at the closes.
Andrew, we have to stop our official power charting session, but we can continue on demand on YouTube if you can hang on for a minute. We can pick up 1 or 2 more markets.
Okay, I'm always ready to hang around with you. We have some good calls.
Okay, hang on. So here we are. You wanted to look at cotton, and here we have cotton this weekly. What do you see?
It's still there, still up. I've been bullish cotton basically since July, August. You know, I talk about the moving averages of RSI going up through 50, then 60, and then acceleration, and we've had it. Now we're starting to do it again to where my targets were around 1 to 105, but I think it has the potential to probably get to 110, 112, breaking all-time highs, going back to what, 2018. And cost of goods, clothing, materials, you know, other things. It's going to be strong. It's this market, it's getting stronger.
Into prices, big input.
Yeah, it's not even pulling back to the 40 level with my range rules. It's only coming back to 50 and creating long-term positives. So I can probably see 110. And if it takes out 110, who knows?
Here's a daily just to see it.
Yeah, that's a screamer.
So this is a beautiful what we would call reaccumulation here across this area, September back to, call it March, April. And that all becomes a count for point figure purposes. So
Well,
and now we've had a
you can
beautiful
draw a line.
jump.
You can draw, yeah, but you could draw a trend line from the May lows in RSI through the recent low in RSI, and set that up on your
Like
bar
that.
chart. No, down to the bottom. I mean, down.
Okay.
Yeah, there's your long-term positive. You look at those two prices. What's that one back in May? What was the close back there in May?
It's about 81, a little over 81, 81 and a quarter.
All right, what's the close recently? 89. Go down to the bottom. There you go.
Yeah, it's right around 89.
Now that's what I call a positive reversal trend line. I'd take the positive, long-term positive, and find those same 2 points, the X point in May, the RSI point in September, and we're looking at 81 to say 89, 8 cents. Add 8 cents to the high close that was made the end of August in the RSI.
96, call 96 and a half, a little higher. Oh,
Okay,
high
then
close,
just
high close. That was speed 95.
add 8 cents to it. It says it's going to go to 103. It clears 103. I was talking about 105, but the positive reversal target's 103. And it's been there intraday, but it hasn't closed above it yet. So we might see a little pullback and then turn around and clear 103. We're probably seeing 105, 110, 112.
Well,
each one of these commodities is getting in line in the inflation parade.
this point and figure really has a substantial count. I believe that even goes higher than that.
Oh, I would too.
Yeah,
But just the confirmation of going above 103 says it's got more to the upside.
Yeah, there's a big count right here. So interesting. And it's a 3-box method. So anyway, people are encouraged to count that at home. And so now we're going to look at, you wanted to look at XLY.
Right.
Okay.
And that should be, I believe, consumer discretionary.
That's right. So let's get you to a RSI chart. Excuse me. So there you go, daily.
All right, this was one that I looked at a couple of weeks ago. Actually, back in July, I started really paying attention to it. We had a momentum peak. We had price peaks. Then we went sideways and we sold off to about the 50 level. Then we had trouble getting back above 60. And then also the 9 moving average of RSI never went back above 60. Right in there.
Yeah.
You had 3 head bumps, as I call them, and we turned down. If you draw a trend line with the August low in RSI and come to the right where the September low is, the first one, there you go. If that breaks, it's going to be a massive break. The thing I noticed over the years is this XLY will top out before the stock market does. And when it showed up in July, that's why I was watching for an August high in the Dow Jones, the S&P, even as much as the NASDAQ. Because consumer discretionary, if you got an extra $500,000 to spend, you've already paid your bills, now it's discretionary spending, and you cut back on that, it'll have an effect on markets. And that's why I said it's a good leading indicator to what the stocks are going to do.
Right.
That to me has put its high in momentum wise back in July, but the price high came later. And even though it came later, it still did not take out the RSI high and didn't even take out the 60 level. So the range rule's there. And now you've got the 9 moving average of RSI. If it turns down through 40, you're going to see a big drop in this, which should lead a big drop in the stock market. And I'm not negative on stocks. You know, I always tell people when I say I'm bearish on something, I said, I never say I'm bearish. I'm just saying it looks like the trend's changing. And you're going to take that smile and you're going to turn it into a frown if you're not careful.
Now
You've got to have stops.
here's
Which one's
this
this?
is Amazon, and you had
Oh,
wanted to have a look at
oh,
Amazon.
yeah. The July high, the lower high in price with that candle that got up to 3,700. Yeah, and look at where the RSI was there, and then look at where it was in early September on the RSI. It's almost a negative longer term. And you got the moving averages turned down. This is one I'm going to be watching. This is daily. I'm going to watch to see if that 9 moving average of RSI drops below 40, because I'm going to say, folks, and I'm probably going to get hate mail for saying this, but I think Amazon's going to be one of the big boys that's going to take a hit.
Well, certainly this is one of those consumer stocks that you were referring to. There's, I mean, obviously discretionary and staples that are in Amazon, but you know, it's been pretty remarkable stock.
Oh, it has.
And then,
I mean, you look at weekly and monthly on this. This was a company that was destined to just be a rocket.
yeah,
And it has been.
Now here you can see the weekly. Here's a climax, automatic reaction, range bound condition. We call this an upthrust after distribution right here.
Right.
And oftentimes, because literally upthrust after distribution means distribution is complete. And then there's nothing to hold the stock back, and it can just go. And
well, then that means there's distribution, it's complete, and then there's indigestion when it goes down.
Yes, exactly. Yes. And so this is a very interesting structure here. And upthrust after distributions are designed to trap the momentum players. So the momentum traders, you know, will jump in on the breakout, and then, you know, if they don't set their stops, be real disciplined about risk management, then they, as this goes down, it really just doesn't even stop. It just, oftentimes they can just cascade lower.
Well, you have momentum traders, and then you also have the FOMO, fear of missing out traders.
Yeah, the FOMO traders.
Yeah, the FOMOs. Because an RSI pattern like that, I'll get a call from somebody or a letter that says, oh, it looks like it's breaking out. I got in yesterday and I'm going to ride it because it's a breakout. I said, so it's a fake out is what it is. It's not a breakout. I said, they've got you convinced now. I said, how long you been using RSI? He said, I don't need help. I've been using it for 6 months. I said, you give me an hour and I'll teach you more in 1 hour than you could learn in 6 months. That's a fake out.
So here is a stock that you mentioned earlier, which was Bed Bath. Weekly here and a breakdown. So have a couple minutes left. So tell us what you think here.
Well, that last peak right there into, is that May or June? Yeah, that lower peak in price was lower than the first high. Markets don't go down from their first high. They'll make an attempt to go back up. There, the RSI did what you might call a throw over. I call a fake out. Go to your left. Come to your right. That first week of May or June, where that RSI was, up at top. That's a fake out. It's not a breakout because the moving averages were down on RSI. Now you've got the RSI dropping. That's like last one out, bring the flag. That stock there is in trouble, serious trouble. And that's only on daily. But it's
another consumer name. So
yep. Yeah. There's something out there that's bigger than all of us. But the charts will show you what they're going to do.
And why don't we finish up with Facebook? This is a weekly here at Facebook, and we'll go to it. Maybe we should just start with a daily.
No. Right, that one's fine because this RSI pattern at the top, you'll see a divergence that's a shaded area above 70. Okay. Then it's followed by about a very tight 2 or 3 period. This is daily. Weekly
chart. Yeah.
2 or 3 weeks later, it makes a slightly higher high. Then it drops. Then it comes back up and it cannot get above 70 when it's making the highest high. But at that point, the moving average 9 on RSI has started to flatten out and turn down, or looks like it's getting ready to roll over, and it did. This may just be the start of that, and those lows back in March. Well, your support's probably at about 290 to 300. And right now it's at 340. So if I were in that sucker, I'd have a put on with a 340 put, give myself a couple months, 3 months, 4 months. And if you're going into the Christmas season, this retail may be tough.
Well,
and there's so much built into the expectations of earnings. I don't think they're going to match it.
Now, we're not making recommendations. We're just educating, but just, follow
the patterns.
Follow Andrew's RSI logic here so that you can learn how to identify these on your own.
Yeah, if they want to call me, I'll help them.
So
just write to me and I'll help them.
Well, you're awesome. And
thank you for saying that. I'm just me, and I learned the best way possible doing the charts by hand. And there's certain charts that I'm going to put back on graph paper. I don't need a computer. I can see the patterns just off the RSI charts. I didn't have computer, but
so
it's going to be interesting going forward.
So last chart we'll look at here is sugar. And I just want to point out that this is a market that Andrew has been paying attention to. This goes back to, I think, 2015 right here. And it's a substantially large structure. And I was just doing counts. I have a count that goes 31 and then another count that goes 43, and which is above the high of this 2011 peak. And I want to put up the RSI for you. To just
like I said, I've had targets, from when this was down around 15, 16. That was a nice bottom. Came back to that, bounced off that 40 again, and it's staying above 40. Now this is a daily chart, but I think you're going to see 22, 23. If it gets above that, 30. Because the weekly charts will start showing. It's like a cup and handle that everybody talks about.
Well, it's a classic reaccumulation structure in Wyckoff, and we could actually count that for a swing trading count.
Yeah,
here.
And you can also see the moving averages of RSI crossing up through 60, where the 9 went up with that first peak where it was shaded above 70.
Now here, this is support. So old resistance, and old resistance becomes new support. And so this is a really interesting place in this sugar.
That's what I call top bottoms. What it was a top is becoming a bottom.
There you go. Interesting.
And it's got positive reversals in it too. So it's still up. And when it turns up, that 9 is going to go back above 45 on the RSI and cross 60 and accelerate. So we can get to the higher 20s and low 30s minimum.
Andrew,
that's what the chart.
Yeah, go ahead.
No, I was just going to say that's what the charts are showing me. Today's technicals write tomorrow's headlines.
Well, you are always a gentleman to come on Power Charting, be our guest. We love having you here. And
I enjoy it. It's fun.
Well, it's always fun to hang out with you and talk about markets. And I know that's the way our community feels about this too. And
Rowan and Martin 2.0. We're the second edition of Laugh In.
Now, let me just say this one thing for people. And as we conclude, if you want to be able to set up your RSI to have the look that we just used there, which is really designed after Andrew's methodology, here is the setup that I've used. And this sets up the horizontal lines and changes the colors and all that. But you can do this, screen capture this, and then build this chart for yourself. And with that, Andrew, thank you for being here.
I just want to say one last thing, in the fact that, I've been a teacher forever, like you're a professor, but I am, because of what I see in the markets the next 3 years, 5 years, I'm going to offer a new service. I do it for my clients. I do it for my students, but I'm going to start writing comments in a commentary type service and just pointing out different things. There may be 3 or 4 comments a week, depending on what it's looking like on a chart. I may mention things I'd like to see you draw your attention to because they should be getting ready for moves. I think we're going to call it Cardwell RSI Trader Diary Notes.
Fantastic.
And I'm just going to post them on there, and I'll offer it as a subscription service.
Wow. Well, your
But
followers,
we're not going to, it's not going to hit 3,000 subscribers because I will keep it to where I don't want to be affecting markets. And if I make a comment, the market just stopped just before it gets down to my buy point and reverses. So it's going to be a limited service, maybe to 300 or 500 people. That's all.
well, Andrew, we so look forward to that.
And we'll share it with you on power charting.
And yes, and when you get ready to launch that, we will be on here and talk more about it.
Okay, I look forward to it, and you guys enjoy your afternoon and evening. My heart is broken. My Phillies are already knocked out of the baseball playoffs, and the Eagles don't look like they're going to do much better.
Well, you're just gonna have to focus on markets.
Yeah, I do. That's what I figured.
Yeah.
God looked down and said, you got to concentrate on work. There's nothing to be excited about with your sports teams.
Nothing to see here.
Take care.
All right. Thank you, Andrew.
You're welcome. Bye-bye.
So long. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.